Guys, welcome back to the channel. Welcome back to another video. I'm Steve, and today I want to talk about 4 tips for successful investing for beginners. Without further ado, let me jump into it. I got them written down on some index cards, so I'll jump into it. Number 1 is do your own research when you're trying to buy your first stock or buying stocks, period. I cannot tell you how many times, numerous, times I met people and we talked about stocks and they tell me how they got in some type of bind, listening to somebody else's advice, or they had a whole bunch of money and they were sitting there with their husband or, significant other, and they pick a stock and then they'll let the other person pick a stock, and, they'll call other people for advice. Hey, I got $20,000 here. What you think I should invest in? Never do that, because at the end of the day, it's your money. It's your portfolio, and it's your responsibility when it all, positive, be it positive or negative, whether the stocks go up or down or the businesses fail. Now, I'm not trying to scare anybody, and I'm not trying to, deter certain, people from including other people in there. But I mean, you got to be careful of who you take advice from. That includes YouTubers like me and just people out in the street, family members, people that you trust. Unless somebody's really, really established and they're in that type of aura, they should tell you the right thing to do. Like I said, it's your responsibility to pick the stocks. So I mean, we'll just leave it at that. Tip number 1: do your own research when building your portfolio. Okay, that's number 1. Tip number 2. Don't get emotionally attached to a stock. And when I say that is like, don't just chase big names because they're big names. When I first started investing, with TD Ameritrade back in the day, and I seen all the stocks there were, I saw Nike, I saw Apple, I saw all these different names, and I'm like, man, I can buy this or I can buy that. And man, you didn't know. You don't know. But the thing is this: do your own background on every stock that you want to pick. Whether it's a textile stock, something that makes clothes, something that's electronics, technology, there are many answers on this quiz called the stock market, and the answers can be right and can be wrong. It's always multiple choice, depending on what type of investor you want to be and how much loss or how much, risk you can tolerate. Everybody's opinion is different. Also, everybody's stock, knowledge is going to be different. What I mean by that is this: you're coming into the world of the stock market. Somebody that's seasoned may see something in the same stock that you see totally different. They can mention something, you being new into the stock trade can get deterred by it. That's why I say you always do your due diligence and then have a plan of when you're investing in something. Why am I investing in this? What is my long-term goal? How much loss can I stomach? How does this work for me in the end when I invest in this? There's all different factors, but the bottom line is, and what's great about the stock market is, everybody that's picking a stock or holding a stock is doing it for multiple reasons. So you got to find out what your reason is, where you want to be down the road, your end goal with holding the stock, and if it's a good investment or not, right? That's number 2. Let me add this too. Another thing about, what we're talking about with getting emotionally attached to a stock. A stock does not know you own it, nor does the company. And if you got millions of shares and it's knocking your percentage, you're like 9-10% of the company, nobody knows you exist. So don't get attached when the stock goes up and down and you start cursing the people out, or the CEO, like he knows you. He doesn't. You got to detach yourself from that. A stock price can go up and down with a lot of different factors, whether it's the earnings call, which is like every 3 months, which is like a report card of what they've done in the last quarter, which is 3 months, you know, sales, profits, and the like. And it could be up or it can be down. It has nothing to do with the company. One time AT&T had bad earnings. I got mad. I'm like, oh, what is AT&T doing? Oh man, they messing up this and that. I didn't even do my due diligence. I lost track of why I had the company, and then you come back to reality, there's still trucks going up and down the street. The stock market price, you got to differentiate that from the values of the company a lot of time. And that goes into what I was saying, where, you study and do your due diligence and the value of the company. You have to value the business and why it is that you're picking this business. And you have to remember that. Remember, it's a long-term goal. You know what I mean? It's not a sprint, it's a marathon. So that's one of the things you got to keep in mind. Another thing is the stock market is not there to tell you what to do. And this goes along with stock tip number 1 when I was saying, don't listen to everybody's advice. The people that are on MSNBC or on these other financial, channels, it's their job to create news. They are still the media, whether it's hysteria or anything. They'll talk about a certain topic. It'll be 4 or 5 people up there. They'll all give different views of the problem or the solution. Never get caught up in that. It's just entertainment. Now you could get some good advice out of there, but you have to be mindful. And like I said, do your own research, and then you can differentiate when they're just talking and when they're making sense. So that's tip number 2. Don't get emotionally attached to a stock. All right, let me grab my 3rd card. Stock tip number 3. And this goes back to a little bit I mentioned before in tip number 2. Have clear investment goals. Now, you can ask yourself these questions. Why are you investing? Did you hear about somebody else being in the stock market and now you want to be in it? Or is this something you've been wanting to do for a long time? Either way, you should have a responsible reason to why you want to do this, because this thing right here is not something that just happens overnight. What am I trying to achieve? And what I just said, have a goal and all of that, where you want to be 5, 10, 20 years down the line, how long you want to hold stocks. Do you have an objective of leaving something for your children's children, building generational wealth? Do you have something where, hey, I'm just going to save up for a house. It might take me 5 or 10 years or whatever, or I want to get that dream car. Either way, it's entirely up to you, and there's nothing wrong with that. Another thing you got to ask yourself, and this is the big one: how much loss can I stomach? Because I've had stocks in my portfolio that have been down 40%. Hell, stocks right now, some of these stocks in the market right now are down 60, 70%. You never know what the stock market's going to do. You cannot time it. Nobody knows. But you have to, and this is why you put your money in the good businesses, valuable businesses that you put your time and effort in to study. So when the stock market goes up or down, whether it's from a medical disaster, whether it's war, or anything, you're prepared, because while everybody's panicking and running around like chickens with their head cut off, you're sitting cool. You're sitting back cool because you understand it's only temporary. Last thing is, what's your time horizon? Like I said, how long are you going to hold the stock? How long are you going to hold it? Is it going to be 5 years, 10 years? Hell, it might be a year. A stock might be down and you got a hunch it's going to jump back up or something like that, and then you put a little bit of money in it and to try to get a quick gain. I mean, the world's your oyster. Everybody does whatever they feel like doing, and who am I to judge, But I'm going to give you that stock tip number 3. Now, I'm going to give you a 3B real quick. Let me put this down. Talk freely. If you're a beginning investor, you will run into this. You will pick stocks, and then the next day you'll see stocks and be like, oh, I forgot about that. Or before you even put your portfolio together, there are stocks you got in your head, and then you'll put the stocks together and then be like, oh, I forgot this stock. And then you'll want to take one off and add another one. Set it and forget it. Don't touch it. But one of the things that can help you with that, with the indecisiveness and seeing too much, because I mean, you would get hit with overload in the beginning. Um, you can try to invest, and this is just my opinion. You should try to invest or investigate ETFs, electronically traded funds. ETFs are baskets of stock in a particular sector, or it could be the whole, different sectors together, where if you can't decide on Apple or Microsoft, you can go and get an ETF that's in the technology sector, and you can get all of those stocks at one time. And the way it works is it'll have one set price, and it'll have a bunch of tech stocks in there, and they have different percentages of each tech stock. So you'll have ownership of a lot of different tech stocks that you want in your portfolio if you can't decide. And say Apple's goes down or Microsoft goes up, or if one of them goes down, it'll mitigate your losses, but you still get the benefit of owning two great companies. So that's just one of the things, investing in ETFs. Vanguard has some good ETFs, but at the end, I think what I'll do is I'll give you a bonus of some beginner stocks that I think are worth taking a look at. So let me get to this last point. The last point is this. I like to say this is tip number 4, the last point, right? Own it like you own it. And when I say own it like you own it, when you're buying a stock, you're buying a piece of a business. You become a business owner. There was a minute part of the business. You're still a business owner. It's your responsibility to keep up with the business news. Now, I have a Ameritrade account. So any stock that I invest in, I can just hit news on it, and it just show me all the stocks that I invest on during that time, and I can keep up just briefly in what the company's doing, and this and that. Buy your investments pridefully. You're a business owner. Say if you own shares of Apple or whatever, be prideful in that. Feel good about it, that you made the right decision in picking that stock. And that only comes down to one thing, and I've been talking about this the whole video. Just do your due diligence and look into the company background. What makes the company go? Will the company be around 20 years from now? Do I believe in the principles of the business and where they're going? Do I see a great demand for this product or this service that the business has? It's a lot of different factors, but once you make your decision of the stock that you want, you should feel really good about it. And then, like I said, we set it and we forget it. You set the stock. I made that decision done. We won't know the outcome until years down the line, or whatever your timeline horizon is for the stock, keeping the stock. And then what you do is you dollar cost average, which is basically every month you put a little bit of money into your finance account, and then whether the stocks go up or down, you continue to buy positions in the shares. That's why, as a beginner, I'll give you another tip. As a beginner, you shouldn't have a whole bunch of stocks. You shouldn't. I mean, as a beginner, I had 3 stocks for the first year, and I had like 1 ETF. And that's how I learned about ETFs and how, the stock market goes. Until you understand, I would give it at least a year, 3 to 5 stocks. And until you understand how the stock market runs, how things can influence prices going up and down, how earnings can influence the stock price, and a little bit of, the terms like PE ratio, earnings per share, and things like that with your companies, then you would jump into it. Because a lot of people that get tricked, they'll see YouTubers on here and they'll have 30, 40 shares, different type of stocks. And they'll say, hey, my portfolio, because I look on YouTube sometime and I'll see that the ones where they say, hey, this is I'm unveiling my whole portfolio, my stock portfolio, they get a lot of hits. But a lot of times, man, when they have 30 and 40, those are 30 or 40 companies you have to keep up with all at one time. And a lot of these people that have that are full-time YouTubers, meaning they have time to sit at home and look at all of that stuff. People like me and you, we still work. You got a 9 to 5. You ain't looking at no 50 stocks a day. You know, you ain't gonna have the time because you still got to go and work. So, you know, just be mindful of that. I just wanted to bring that up. But yeah, going back to the bonus, I promise you the bonus. I give you a few stocks where, you know, that'd be good for a beginning investor. Now, don't take my advice, but they're worth taking a look at. Now, these stocks are blue chip stocks, bona fide stocks, stocks that will, you know, they're not going to go up and down and kill you, you know, have you on a roller coaster ride. And these are stocks and companies that are bona fide and been around for a long time. And they're basically brand name, recognizable names. So I'm not telling you to invest in them. You know, do your own due diligence, like I said. But, you know, I just want to give you a little bit of idea of the kind of stocks that will help you have a successful portfolio. And they go as follows. Apple. The ticker symbol is AAPL, in case anybody want to look these up. Amazon. AMZN is the ticker symbol. AMZN. Now we got Disney. Everybody knows what Disney is. DIS. That's the ticker symbol, DIS. And we got Johnson & Johnson. Healthcare is in the healthcare sector. JNJ is the ticker symbol. JNJ. Then we got Coca-Cola. Ticker symbol KO, like knockout. And then we have Visa, which is one of my favorites. Ticker symbol is just the letter V. Okay, guys, I hope you enjoyed the video. If you could, hit the subscribe button. As usual, I upload daily. Like to talk about stocks. You guys have been doing really good in the comments section. Man, leave me a comment, man. Tell me how I did in the video. And if you could, subscribe. I'm trying to get this YouTube train rolling and build this community. And I'll see you guys in the next video. And happy investing.